Hi, this is Chuck Hughes. In today's video, we're going to take a look at the dividend strategy, which is the ultimate in simplicity, with just two very simple rules. Rule number one, we want to invest in companies who have a history of increasing their dividend. And number two, we want to compound our results by reinvesting the dividends in additional shares of stock. I normally like to invest in companies whose dividend yield exceeds that of the current 10-year Treasury, which right now is yielding about 3.2%. Now, there's generally four types of stocks that meet my criteria for investing in dividend stocks, and they would be master limited partnerships, real estate investment trusts, energy trusts, and income funds. So I've had real good experience investing in these types of dividend paying stocks. And in most cases, these types of dividend companies, they'll pay 2, 3, or even 4 times the current yield on the 10-year Treasury, and up to about 8 to 10 times the current yields on certificates of deposit. So you're really going to boost your dividend income with these types of dividend paying stocks. And I found that the dividend growth rate to be a very reliable forecaster of the future earnings potential of a stock. Dividends are paid in cash, of course, and they're not just figures on a balance sheet that can be manipulated. So normally corporate directors, they're not going to increase the dividend unless they know that there's future earnings potential to cover that dividend. So this is a great way to pick winning stocks. So overall, the dividend strategy is very simple. You don't need to do any calculations. There's no technical or fundamental analysis. So it's a great way to invest to achieve a low risk, very good return over time. Now, an important part of the dividend strategy is reinvesting dividends in additional shares of stock. This allows us to compound our returns, and over time this makes a huge difference in returns, as we'll see here. I'm using an example of a real estate investment trust that I purchased. My brokerage confirmation shows I bought 4,000 shares at $28.56, and the total cost, including commissions, for this purchase was $114,248. And I picked this particular real estate investment trust because it increased its annual dividend over 166% over the past 3 years. So this is a very solid company, growing its earnings, and this enables it to raise the dividend consistently. And so the table projects the results of compounding my initial investment in additional shares of the stock, and we can see that year one the annual yield is 21%. Year 3 it goes up to 31%. Year 5 it goes up to 45%, and by year 10 we're up to 118% annual yield. So this makes a big difference compared to not compounding your return. So I just wanted to illustrate the difference between compounding and not compounding. And by compounding, this investment would achieve a 100% total return in less than 4 years. And a 200% total return in less than 6 years. And with this table, I'm assuming that the stock price remains the same and there's no increase in the annual dividend. This stock is currently paying a $5.60 annual dividend, and based on the purchase price of $28.56, this is a 19.6% annual yield. So the dividend strategy is very simple. There's no calculations to make, no decisions to make. We simply reinvest the dividends in additional shares of stock. And many of these dividend paying stocks have what are called dividend reinvestment programs, and this allows you to automatically reinvest the dividends in additional shares of stock. So this strategy is great for retirement plans or investors who need a consistent flow of income. Now, this snapshot of my brokerage confirmations show that recently I received over $42,000 in cash dividends. And just to recap, with my dividend strategy, we just have two simple rules. Number one, we want to invest in companies that are consistently raising their dividends, and number two, we want to reinvest the dividends in additional shares of stock, which allows us to compound our return. So very simple strategy, but it's a low risk way to realize a good income return from your stock investments. Now, I use the dividend strategy to make trade recommendations in my Inner Circle advisory service. If you want to get updated profit results for the dividend strategy, just log on to chuckhughesic.com and click trade results. Currently in the dividend portfolio, we have an open trade profit of $166,000 and an average return of 70.5%. So again, if you'd like updated profit results, simply log on to chuckhughesic.com. This is Chuck Hughes. I want to thank you for listening, and I wish you the best in investing success.